What's up, everybody? Well, yesterday it looked like Fed Chairman Jay Powell caved into Trump. In his comments, he talked about the fact that the Fed was closing in on the neutral rate, whatever that is. Actually, the Fed does not understand what the neutral rate is. I made videos about that here. The only real neutral rate when it comes to monetary policy is zero, because only at zero is the Fed not adding income via the interest channel, nor is it taking it away, which would be the case if they had a negative interest rate. At zero, the Fed is neither adding income via the interest channel nor taking it away. Any other rate that they claim is the neutral rate is just arbitrary. They make it up in their heads. They have no idea, all right? And anyway, he didn't state what that neutral rate is. Is it 2.5%? Is it 3%? Is it 3.5%? All right, so we don't know how much longer the Fed will continue raising rates in this current, rate hike regime that they're in. We know there's going to be another rate hike in December. Right now, some analysts are saying that's going to be it, December, and they're done. I think we are still very early on in the rate hike operation. It can pause. I mean, we've seen that many times in monetary policy campaigns where you have rate hikes or rate cuts. They pause for a while, then it resumes at some point. We'll see. Let's talk about the stock market. The stock market since last Friday, when we had that kind of mini meltdown in the day after Thanksgiving, Dow Jones is up over 1,000 points. The S&P is up over 100 points. The NASDAQ is up over 350 points. Stock market looks as if it has bottomed. Everything that I look at, with the exception of one or two things right now, but everything that I look at fiscally is saying that the economy is going to be well supported through fiscal expansion. Now, there have been some things, I have to say, that have popped up on the radar screen that have caught my attention, and that has to do with the labor market. Very important, because if the labor market goes south, if the job market goes south, then the probability for a recession goes way, way up. And if we go into a recession, the stock market is going much, much lower. Okay, stock market ultimately follows the economy, not the other way around. What I'm looking at, and by the way, if you want this information and the daily emails and the report, just go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. Nobody does what I do. This is applied MMT. This is taking the concepts of MMT and using them to invest and trade in the markets. There are a lot of MMT academics out there, theorists, who talk about the concepts of MMT, who write about the concepts of MMT. I do all that, plus I use it to trade and invest in the market. So if you want to follow along, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Anyway, I was alluding to weekly unemployment claims now at a 6-month high. That's not good. I've also been focused in on unemployment benefits being paid out. That now is shooting up a little bit. And like I said, if the job market tanks, if the labor market goes south, then the probabilities of a recession go way up. And in that case, if we do go into a recession, stock market is going much lower. Much lower. I mean, we could feasibly erase the entire Trump rally since he was elected back in November 2016, where they, I think the S&P at that time was below 2,000. So you have that. Then you have the oil situation. This morning, oil, WTI, broke down below 50, which I found it to be surprising, because if you look at the EIA data yesterday, wasn't that bearish. I mean, yes, you had another build in crude, 3.5 million barrels. That was the 10th week in a row. But don't forget, in October, November, every single week, the government has been releasing oil from the Strategic Petroleum Reserve. That ends this week. It's over. They've been doing 2 million barrels a week. It's done this week. So that was a significant portion of the build over the last 2 months. Now, in that report, very, very strong exports. Crude exports shot back up, and refined product exports at the highest level ever. Highest level ever. And by the way, even with the 10-week build in crude inventories are still down year over year. The gasoline surplus is starting to come down. So there are a lot of things. Distillate stocks are still really low. There were a lot of things in that report. They were simply not that bearish. Okay, so I was surprised to see the failed rally yesterday, and then I was surprised to see the breach below $50 today, to be honest with you. Now, we're back up. Why are we back up today? News broke earlier today that Russia was now on board for a production cut. I mean, prior to today, Russia was saying, hey, sorry, we don't want any production cuts. We're fine the way it is. And the Saudis were saying, hey, we're not going to be the only ones who cuts. If somebody else doesn't join in, we're not doing it. So the prospect for a production cut at the OPEC meeting next week looked very, very dim. All of a sudden, Russia pops up and says, hey, we're on board for a production cut. Now, I have my suspicions as to why that has happened. Notice today that Trump canceled his planned meeting with Vladimir Putin in Argentina at the G20 meeting. He canceled it abruptly, citing the incident in the Sea of Azov over there by Crimea. Now, that was all planned. That was all planned with the intent of derailing the meeting between, you see, the deep state. They don't want to have the U.S. and Russia normalize relations. There's too much money involved in keeping Russia as an adversary of the United States, as an enemy of the United States. They will do anything so that relations cannot be normalized. Now, that is extremely dangerous because you're talking about a major, major nuclear power, the biggest. So these guys are psychopaths over there in Washington. But anyway, the meeting was derailed, and all of a sudden, out of nowhere, Russia says, okay, we're on board for production cuts. How's that? So I don't know, maybe I'm reading too many spy novels, who knows, but it seems to me a very interesting coincidence that when the meeting is canceled, Russia is now on board for production cuts at the OPEC meeting next week. So we'll see what happens. We'll see what happens. Dollar was down yesterday. It's coming back a little bit today. There's a belief now that the Fed is nearing the end of its rate hike campaign. And, of course, you're going to get that whole zombie portfolio flow action back the other way if that is ends up to be the firm established belief. We'll have to see. To me, that's not necessary. Rate hikes themselves are inflationary. They're bad for the currency. If that were not the case, you would see what Argentina has like a 60% interest rate. That'd be the strongest currency in the world. Turkey, what do they have? 24, 25% interest rate, 40%, something like that. That'd be the strongest currency in the world. Ukraine has some crazy high interest rate. That would be the strongest currency in the world. Right? Japan has a very strong currency. It has a negative interest rate. So, I mean, it's very easy to understand. People just ignore it because they look, they look through the lens of their own beliefs. It's like religion. We keep hearing it. Oh, rate hikes are bullish for the dollar. Meanwhile, you had 8 rate hikes. The dollar index went from, 103.80. Where is it today? 96, 97? 8 rate hikes. You're going to have a 9th. So, I mean, you can make up any story you want in your head. The facts are the facts. The facts are the facts. All right, everybody. If you want my report, go to pitbulleconomics.com. Sign up for a 30-day free trial. I send out lots of emails all day long on the markets. Have a great day. Bye-bye.